What is going on, traders and investors? Camilo here from Trending Wavez, bringing you our new segment for the channel, our Sunday night videos, which will aim to cover the S&P, the QQQs, and potentially some other names as we progress with this new segment. But this is intentionally to get us ready for the week and for Monday, guys. So April is over, May is here, and as the saying goes, sell in May and go away. If you're not familiar with that saying, it means that we sell in May and we come back in at the end of the summer. All right. So normally the summer trading months are very slow. They're very choppy. We get chewed up and spit it back out. Right. I mean, I'm exaggerating, but the point is this, guys. So we could open at a price here and then go up and down, sideways, whatever. Will ultimately come back to that same area. Okay, so those are the days, those are the times, or those are the months that we as traders as a whole, that people tend to give back what they've gained through the prior year, or if they haven't been able to take advantage of the previous months, they're gonna try to get more out of the markets. Okay, and for as long as I've been around in this market, I do advise and suggest that less trades, more money, in other words. All right, and become protective of your capital, become protective of your gains. And if you haven't gotten any gains so far, that's okay, you'll have your opportunity, but do not blow your account thinking that you're going to try and kill it in the summer, because it will be a bit slow. I mean, who knows, but that's normally the case for the markets. Okay, hedge fund managers, portfolio managers, big money goes on vacation and they don't come back until September. So there you have it. And just to add, I am a little stuffy at the moment. I've been having crazy allergies this weekend. Pollen kills me. So please bear with me here, and do excuse any snots or sneezes or coughing and whatever. Anyway, so let's take a look at the monthly charts, right, of the QQQs and the SPY. Before, actually, I also would like to review today the chart of the 10-year yield. I think it's very important to start looking at that currently, because that's kind of giving us a little bit of a hint as to where we could potentially go. All right, I know that that thing has been a little bit in the quiet, under the wraps, right, if you will. The media hasn't been talking about it as much, and that's because it's been in a correction and thus giving us a little bit of push on the indices. But when excuse me, when it starts turning around, then we'll start noticing. But here at Trending Wavez, we will be ready. All right, and we're going to review that chart. So the SPY monthly candle closed at 4. Actually, let's review. I'm looking at this area here. Let's go from the beginning. We opened at 398 at spot 40. We closed at 420 spot 72. The low of that candle of that month was at 398 spot 18. We closed at 417 last Friday, spot 30. So that means that we gained 5.29% on the S&P for the month of April, which is pretty good. Now, what will May bring us? Who knows? We shall see. All right, so that's the SPY, the QQQs. The QQQs, let's see, we opened at 323 spot 07. The high was 342, the low was 322, and the close was 337 spot 99. Again, a 5.91, almost a 6% gain. Going back to the SPY, okay, we are going to now look down to the weekly time frame. Okay, we noticed that this candle was pretty much pushing us lower. Okay, for the past 2 weeks, or for that week, we did not go anywhere, taking us down to the daily time frame. And let's turn on our labels. You'll notice that I'm changing colors here. All right, for the labels, I'm starting to color code them so that in case we are not familiar with the wave degree names, like for instance, this is the intermediate wave degree, we'll call it the green wave, or the green degree, the blue degree, and so on. All right, I haven't done all of them yet, but we will. Okay, so as we go. So starting off from March low of the COVID crisis, right, we went up in 1, down in 2, up in 3, down in 4, up in 1 again, down in 2 in the minor degree, up in 3, down in 4 in the minor degree. Now let's zoom into this area to further review. Taking you down to the 1 hour time frame. Yes, you notice I haven't finished the rest of the labels. Excuse me. So from the February highs in the intermediate wave degree 3, right, ABC to finish off wave 4, up in 1, down in 2, into the 50% retracement of this overall wave 1. Now we're up in 1, down in 2 again. We accelerated, an acceleration gap into the wave 3, okay, ABC 4, and now we are here into this funky sort of price action that took us nowhere in the last week of April. Okay, we technically did not go nowhere. We've been stuck in this range, the 418 area to the 416 area, not going anywhere. So any candle that breaks above this high or below this low could potentially signal a trend change. So let me backtrack a little bit and take you over to let's see, the daily time frame. Okay, so you'll notice that I have this trend channel. Okay, and this trend channel is taken from the 2, 4 projected to the third wave, which normally is a technique taught by Elliott wave principle that will give us a sort of indicator of where the fifth wave could potentially come to conclusion. All right, and excuse me, let me delete this for a second. So a potential, let's take a fib retracement, okay, from the low of wave 2 to the high of wave 3 down to wave 4, and you'll know something here. Okay, so we have already reached a little bit above equality, right? 100% of wave 3. Okay, doesn't mean that wave 5 and 3 have to be equal, but normally, obviously, the equality signals a good, it's a good indication of a potential trend change, okay, and a potential resistance. So what happens here is that once we ran above it, okay, well, now we're looking for price between the 1618 and the 100. So taking you guys down now to the 1 hour time frame, and this is where we are sort of stuck, is in that, in what's going to happen, right? Are we going to keep on going higher, or is this the top now, since we've already reached equality? We could go higher, all right, but at the same time we can go lower since we've already reached that level. So let's take a look. Let's review this. Now, from the wave 1 down in 2, 3, we're looking for this wave. We have been working under the assumption that we are potentially going to find, forget the other. This is sort of combining the alternate candle we've been looking at. If you've been watching my videos, you'll know what I'm talking about. I want to shift between those two. Actually, yeah, let's do that real quick. Let's take a look here at the S&P. Taking you down here. Okay, so here it is. All right, so this is the count where we're suggesting that we are printing a flat, right? We haven't broken above the 1272, and we're potentially going lower. If we cannot break above this level here, the 420 spot 03 or the 1272 with conviction, high conviction, then obviously this is the case where we end up going lower. So now that you've seen this, let's just focus on our preferred count. And our preferred count, keeping in mind our alternate interpretation, if we end up going lower, right, this red line that I have here drawn for you guys, this is sort of, and I quote, not quote, it's my whatever, and I'll say this, right, is the line in the sand, okay, because this will tell us, right, obviously wave 4, if this is wave 4, right, so for instance, I'm not keep on repeating this, but if we end up breaking lower, right, and disregard this count here or these labels, if we end up going lower, disregarding the Fibonacci levels also, wave 4 cannot, under any circumstances, go beyond the extreme or the territory of wave 1. That is very explicitly mentioned, and is one of the Elliott wave guidelines, right? We cannot go beyond that on an impulsive structure. Okay, there's few instances where that happens. There's an overlap, and it happens in triangles, but in this case, we wouldn't be able to. So if in the event that we do end up going lower and pass beyond the wave 1 extreme, then we've already called the top, right? Then at that point, wave 5 in the intermediate degree has finished, and this was obviously, and as I mentioned to you, keeping in mind the 100% extension, we've already reached that level. So we actually topped between the 100 and the 1618, which the 1618 came at 455. So that's potentially where wave 5 would have finished, only if we start selling off heavily into the wave 4 and wave 4 finishes, or the first leg of the wave 4 goes beyond the extreme of wave 1, at which point wave 5 has completed and we are now in the minor degree in the primary degree wave 1, primary degree wave 2, and wave 2 in the primary degree will finish it'll be wave 1, wave A, and then we'll know when we bounce back up in wave B, and then we'll see wave C where that is. But that will be the initial leg of wave A for the primary degree wave 2 if we break lower than this. However, if we don't, right, and we just print a relatively shallow pullback, which will take us down to the 38%. Let's see, if we take a retracement from the lower wave 2 to this high here, let's move this over, I apologize for that, then anything below, anything that will bounce between the 38 to the 50, even, yeah, let's do that, the between the 23 and the 50%, right, this would be wave 4. Normally these wave 4 pullbacks fall in line or find support with its previous wave 4 in their lower degree. Okay, so we will see a 3-wave pullback. Even maybe this is A, B. All right, this will be let's draw this real quick. This would be A, this would be B, and now we're gonna go lower in C. Okay, that could potentially be where we at right now in the case. But if I may, after I review the triple Qs, right, I'm gonna jump into the 10-year yield, and why I think we may continue on higher, and wave 4 has not set yet, and we're still looking for a little bit more upside before this wave 4 sets in, and then before we go on higher into the final 5th wave of the minor degree wave, to close out primary degree wave 1. Okay, so that's where I stand. Okay, just to quickly give you a recap. If we don't break anything above these levels, so the previous high at 420, okay, 418, and we end up breaking below 416 with high conviction, and we go beyond this extreme, then wave 2 in the primary degree has already begun, and that would have been wave A, or the start of wave A in the primary degree. Sorry, wave A in the intermediate degree of primary degree, wave 2. However, if we break up higher, then look for this wave 5 of wave 3 to complete, right, essentially. So where would this take us? If we take our retracement tools, right, so we're looking for from this low to wave 3 high, so anywhere between the 100%, and that's one area in this lower degree, wave 5. Now, in this in the higher degree of that wave structure, we'll look at this. Okay, so a target zone between 435 to 426, that could potentially finish wave 3. Okay, so that's what we're looking for. So once again, if we end up breaking above, then those are the levels we're going to look at. If we end up breaking below 416, we'll look for the shallow retracement between the 23 to the 50%. If we keep on going lower and we break beyond this extreme, then consider primary degree wave 2 has started. Taking you over to the triple Qs, I'm gonna do this a little bit quicker now. The triple Qs, right, same deal. So up in 1, down in 2, 1, 2. We're in 3, taking you down to the 30-minute time frame. So wave 3 finished, ABC into the wave 4. We're up in 1, ABC into wave 2. Okay, and where could this potentially have taken us? If we take this this retracement tool, so it's taking us a bit lower than what we are normally comfortable with. But if we find support at 335.79, which is the 78.6 retracement, again, wave 2 cannot go beyond the origin of wave 1. That'll be an invalid wave count. If we go beyond this level for 334.06, then we are within the flat correction, okay, which is our alternate count. If I take you guys there real quick, it will be this count. Okay, so down in A, up in B, and we'll be now printing wave C. Okay, so again, if we go beyond 335.79, then consider that we are looking now for the intermediate wave 4 to start to complete, at which point we can still find some support and take us higher. Now, if I take you over to the 10-year yield, actually, let me see if there's any other notable thing to review here. Yeah, well, if we break up higher, let's look for the 1272, 334 area to potentially give us some resistance. So those two levels will be 342 and 344. Okay, 344 is the 1272, which is actually, let's just do it here so that you guys can see. We don't have two different charts. Those levels will be this. I'm gonna pull this out here just a little bit more. Here we go. The 1272. The 1272 is the retracement of A to give us the end of wave B. Okay, so this could still be wave A, we're in B, and now we're gonna go down and see like in an alternate count. So I'm leaving this here just so that we can have good guidance, right? So that if these are two levels of resistance that we have to keep watch for, 342.17 and 344.47. So that zone here can give us, if we break through that zone, consider our journey back up to all-time highs and the resumption of this bull trend. At which point we will reach the 350 area, then we'll pull back in wave 4 to finally finish wave 505 of wave 3 in the minor degree. Now, taking you over to the 10-year yield, where I would like to discuss the reason why I think I'm favoring a little bit more of an upside. I'm taking you over to the daily time frame. So if I quickly review this chart with you guys, so from the March lows of COVID crisis, we went up in wave 1 in the intermediate wave degree, A, B, C into wave 2, and now we're up in 1, down in 2. We've completed wave 3, which was 261% of wave 1 projected to wave 2, which was resistance in the upper trend channel. This is another channeling technique, which is from the low of wave 2 to the way of wave 1, and we can get a theoretical wave 3. So excuse me, so that's where we have it. I mean, this is, I don't know if that's where it's going to finish, but let's focus on this area here, this zone here. If I take you guys down to the 1 hour time frame, this is why I favor a bit more upside in the indices. So now, as you guys remember, there was, when the 10-year yield started ramping up higher past the actually, let me take you back here, past the highs of the zone before COVID hit, right, in the sell-off, and so the recovery, then we sold off after, we punctured through that area of resistance. We were experiencing a big sell-off in the indices, in the Nasdaq especially, which is tech heavy, and obviously higher yields is a bad thing for tech, as you guys already know. So it's been consolidating for some time now. It's been correcting, and so what I see here is that we're down in A. Wave 3 has finished, and now we're looking to wave 4. So wave 3 finished, down in A, up in B. So wave B has potentially come to completion, which we've already reached the 50%. I mean, obviously 1, 2, 3 waves here, you can see that, right? A, B, and C. But we can potentially head on higher to complete or find resistance at the 78.6. Okay, so if we end up going a little bit higher, so then consider this on the indices. If we do this, right, guys, check this out. If we end up going to this level, then the triple Qs, that will mean that we are actually going to print our flat correction, and on the S&P we'll print the flat correction as well. That's what that potentially could mean. However, if that's not the case, and wave B is complete, now we look for wave C to take us lower to the 1.43 to the 1.278, which coincidentally comes into confluence with the previous high. So that's a level in which I am looking at. Now, once we complete this area, okay, once we complete this is what I'm talking about. So this could come anywhere in, you know, the second half of May, and then we're gonna see a ramp up higher into the June, July months. Sorry, September, from anywhere between June to September actually. Okay, and this will be the higher degree correction, at which point we enter into another correction in the 10-year yield, right? And then around that time is when we are making new highs, or we're going to start making up ground that we lost during the summer months trading and the indices. Okay, so that's our game plan, guys. So be on the lookout for the 10-year yield. I know it's not talked about as much, as we are going to start stressing it now here in the channel and in our group. So if you guys are listening, I appreciate your time. I appreciate your patience today. Thank you for watching our Sunday night video. Welcome to our new segment for the channel. Please consider subscribing to here at Trending Wavez, and hit the thumbs up notification and the bell so that you can get notified when I upload the videos. If you want to join our Discord group, the link is in the description down below. Come on in. We'd love to see new faces. Try it out. All right. So again, thank you. Good luck in the month of May, and I shall see you guys bright and early tomorrow. Take care. Bye.